What's up, guys? Jay Martin here, investor and CEO of Cambridge House. And my guest today is Peter Schiff, the CEO and Chief Global Strategist at EuroPacific Capital, in addition to the host of the Peter Schiff Show. And today we talked about the education system, we talked about inflation, we talked about international residential real estate, and a host of other topics. Always a fun conversation with Peter. So I hope you enjoy this one. Three things before we begin this. Peter will be at my show, my conference, in January in Vancouver, Canada. I'd love you to be there. He's one of about 80 keynote speakers. We're flying in from all over the world. Beneath this video, there's a pinned comment where you can hit up the event site, buy tickets. I'd love to have you there. Number two, this YouTube channel now generates a decent amount of revenue. And so what I've decided to do with that cash is donate it to an organization that's super close to my heart called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness, and they do an excellent job. Number three, if you prefer to listen to my content as opposed to watch it, you can now find me wherever you listen to your podcast. Just search for The Jay Martin Show. All right, here's Peter Schiff. Enjoy.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, so what do you think about North American residential real estate right now as an investment?
Well, that's a broad, category, because you're also throwing in Mexico and Canada. I would say that, it all depends on the property and, where in North America, what you're paying for it. Because there's a lot of real estate that's very, very expensive, And
okay, so let's look at a state like Idaho, right? It's there's some small towns that are booming right now, but as a state, it's still quite sparsely populated, heavily.
Yeah, look, I would say that rural America, where you can get a lot of land and a lot of house for your money on a relative basis, those type of properties, I think, are going to be more highly in demand, especially as more people work from home, shop from home. So the benefits that you would normally get from being in a more densely populated urban area are diminished. So, why pay those big premiums to be close to work when you don't need to be close to work? And especially since the big cities, have more crime, especially now since there's a kind of hands-off attitude to criminals, like, hey, let them alone, so, there's more crime, there's higher taxes. So, there's a lot of reasons to try to get out of these urban areas into, lower cost, safer environments. So I can see that. And certainly, I think farmland, agricultural, as prices go up and up, farmers are going to make a lot more money. And so obviously, real estate in, the farm belt could be more valuable because of, the crops will be more valuable. And there may be a premium too, where people want to have gardens and they want to grow their own vegetables, and they don't want to, obviously you can't do that as well in a city. Mm-hmm. But if food prices are going way up, if you can grow some of your own food, that could be a benefit. Okay. But I think the way a lot of people will end up making money by owning real estate is not as a landowner, but as a debtor. Because a lot of real estate is purchased with borrowed money, and the government continues to subsidize the rates. So you can take out a big loan and pay a little bit of interest. If you can get a 3 or 4% mortgage in a world where inflation is 7, 10, 15% a year, obviously, your debt is getting wiped out. You don't really have to repay the debt. Inflation gets rid of the debt. Mm. And so the loser in that scenario is whoever loaned you the money to buy that piece of property. But so you'll make money as a debtor, not as the landowner. Because I think in real terms, the actual piece of property you bought may lose value. It's just that you didn't really buy it with your money. You bought it with somebody else's money.
Yeah.
And so, if you put 10% down, and even if the real estate loses half its value, but there's hyperinflation, well, you got 50 cents, but you paid a dime. You still made 5 times your money, even though the house lost half its value, because, you borrowed 90 cents and didn't really have to pay it back because inflation wiped it out.
Yeah. Okay. I'm with you on these rural locations. I'm looking in Idaho. That's why I asked Idaho right now.
Plus, they've got good skiing there,
In Idaho? Yeah. Yeah. Well, it's got 4 seasons, blue sky, 12 months a year. What do you make of some of the hotter markets, though, like Miami and Austin, where, California is currently repopulating Austin, it seems?
Yeah. Austin, I'm not really that familiar. I know that it's one of the more popular places to relocate. And so obviously, prices have probably been bid up quite a bit on those properties. The question is, how much higher can they go? Miami also is benefiting from the flight to low tax states.
Yep.
And it's, obviously it's a warm alternative to California. And, it's also, Florida has been more, COVID friendly than a lot of these other states. So some people are like, okay, I can live more of a normal life.
Like Texas. Yeah.
In Florida. But yeah, there are certain places where real estate is overpriced. Probably no place is it more overpriced than where I live in Puerto Rico, in my neighborhood. Prices are literally, I'm not making this up. They're up, 5, 10x. Crazy time. Prices here for houses are almost acting like cryptocurrencies. And part of the reason for this, incredible appreciation is because so many crypto millionaires and billionaires are moving here.
Okay.
So, a part of that is because of the, there's no capital gains tax here at all. And so if you're in crypto, you have a lot of capital gains and you expect to have a lot more. Now, I think those expectations won't be met. I think these bubbles are going to pop, but in the here and now, a lot of people have moved to Puerto Rico, in particular to, my neighborhood. And so no, I think, would I buy real estate? I wouldn't buy the house I live in right now. Now, of course, you say, well, Peter, why don't you sell the house? Well, for the same reason that nobody else is selling. Everybody wants to stay here. And that's why the prices are so ridiculous, because the people that are here don't want to leave. And then the people who want in very badly. And so they're willing to pay somebody enough money to where they say, okay, I'll move. That's basically what it is. It's like nobody here wants to sell their house. You have to make them sell. Right. So you have to make them an offer they can't refuse. Yeah. And, you see the breaking points where people are like, damn it, $15 million? Okay, I'll sell, but, but you're talking about a house that they paid maybe $2 million for a year or two ago. And they're like, right. Wow, so you're going to give me that much money. But yeah, so it's probably, these are smaller bubbles like in other parts. But you got to be careful. You could buy a house here and a year later, it could easily be down 50%. Why not? Because the amount that it went up is crazy. But then again, prices could go up even more. And of course, if we have hyperinflation, then, the prices don't even mean anything. But obviously, you can always reflect back at the gold price of a house and say, well, how many ounces of gold, would it take to buy this house today? And then you can compare that to how many ounces of gold it would take in the future. Because I think a lot of these markets, even if the price goes up in dollars, the price could go way down in gold. Right. And it's not because gold is gaining so much value. It's because the dollar is losing so much value.
Yeah. Okay. So let's follow this inflation thesis. We continue to see similar numbers in the next few quarters or years. Other than certain pockets of real estate, where can we make money, Peter? Where are the opportunities? Well,
again, I think being a debtor, if you put the borrowed money to the correct use, you could become a big winner through inflation, because inflation is a massive transfer of wealth from creditors to debtors, especially when the inflation is not accurately reflected in the interest rate that you're borrowing. Because obviously, if the lenders understand how much inflation there's going to be, they're going to build that into the interest rate, and you're going to pay a higher premium. But clearly, inflation premiums are not in the interest rates. Now, a lot of that has to do with government intervention. Government has mispriced credit. Because of government intervention, borrowing money is much cheaper than where it would be if there was a free market. So whenever government makes something artificially cheap, well, you're going to get more of it, right? So you want to take on more debt because you're not paying a real market price for that debt.
Yeah.
But, if you just borrow a bunch of money and then just take a vacation and, buy some clothes and some consumer electronics, you're not going to have anything to show for the borrowed money. But if you use it to accumulate real assets, especially income producing assets, then it's a home run for you as far as your net worth is going to be. So I like to buy income producing assets in countries that I think have much sounder economic fundamentals, which is why I'm, not buying in the US. I'm buying stocks outside the US. I'm also trying to buy companies that have a lot of resources that have real value, and not just natural resources, but man-made, plant equipment. Companies that generate earnings today, not that have pie in the sky estimates. So, well, maybe we'll make money in the future, but right now we're losing a ton of money, right? I want companies that are making money now and that are paying dividends now, and that can raise their prices along with their costs and return that to me as a shareholder. And I think, I think gold and silver are underpriced because people are underestimating how bad inflation is going to be. And I think a lot of people have, made the false assumption that, well, even if there is a lot of inflation, people are just going to buy Bitcoin and not gold. I think that's completely wrong. So I think people are overestimating the long-term staying power of Bitcoin or other cryptocurrencies. So looking beyond that bubble, there's going to be a lot of money moving back into a real asset, a real inflation hedge. And so I think obviously the bigger leverage then is going to be in the mining stocks, because those stocks will really go up a lot relative to the increase in the price of gold and silver.
Got it. Now, when you say you're looking at real estate in countries with sounder fundamentals, what countries make the top of that list?
Well, not just real estate. I'm not buying like property. I'm buying companies. Some of the companies I own are property trusts where they own commercial property or industrial property. I'm not really residential property. Per se. But it's more businesses that that I want to own than just being a landlord. That's still a business, collecting rent, but and I have those type of stocks. But I'm invested, in Asia, Southeast Asia, in Europe, South America, Australia, New Zealand. Those areas. A pretty good diversified mix. No countries are perfect, but I think of the developed countries, the U.S. is in a uniquely vulnerable position as the issue of the world's reserve currency. We've had this exorbitant privilege, and losing that privilege is going to have profound implications that the other nations are just not going to have to deal with that because they never got the privilege to begin with. So their economies never got to be completely transformed based on the exercise of that privilege. So when you've built an economy around a certain set of dynamics, and then you don't have that anymore. Like America, we built an economy where we all spend money. We all borrow money. We don't have to produce stuff. We just print money and buy whatever we want. And we've been doing that for a long time. And when we can't do that anymore, it's going to be a huge problem in the United States. And, how we're going to react to that politically, it's very, very dangerous, given, the mood of the electorate and how they view things.
Right.
So I think it's, assets here, it's very, very risky politically, assets in the United States, and the value of our assets relative to assets overseas.
Now, I want to ask you a question about that. So I feel like I see a lot of the fundamentals that you do leading to this scenario, where you said we can't keep on borrowing money. We can't continue to do that anymore. Eventually, we'll hit the end of the line, right? In theory, right? But I've also heard that narrative, since before I was born, right? Since the 70s when Nixon took the dollar off the gold standard, during the 80s crash, the 90s tech bubble crash, the 2008 GFC, and then again today. And, and then you can look at maybe, but today there's way more civil unrest, and look at the populace, like things are getting real. You can't go to a lot of major cities anymore. They're too dangerous. Things are getting very different. But again, you could pull that back to, well, we've seen that before too, right? Like it was only a few decades ago that political leaders in the United States were actually being assassinated. Like it got way worse than it is today. However, we go through cycles and.
Yeah, these problems have certainly been building up over decades, not years.
Right.
And there were a lot of people who read the writing on the wall, back in the 60s and 70s and warned about where we were headed. And they were right. It's just taking a lot longer to get there than they would have imagined. And I think, therefore, because the warnings have been coming for so long without any dire consequences, the warnings are now dismissed, right?
Yeah.
Because, hey, look, clearly it's not a problem. But if you go back and you look at America, let's say in 1970, and you look at what's changed over these 50 years or so, back in 1970, America, or even 1980, but America was the world's wealthiest creditor nation. Now we're the biggest debtor nation. So we've gone from a position of extreme assets to extreme liability. We used to have the world's biggest trade surpluses. Now we have the world's biggest trade deficits. So clearly, right, we've gone from a position of strength to a position of weakness when it comes to global trade. And of course, trade surpluses and being a net creditor nation go hand in hand, because the reason you become a creditor nation is because you invest your trade surpluses, right? But we've had deficits, and we've had to finance those deficits by selling off our assets. So we've gone from being way up here to being way down there, right? So that's a big transformation. In 1970, very few married women worked because their husbands made enough money to support them. Now, almost all married women work by necessity, not by choice. It's not that they're liberated. They were liberated before when they could choose not to work. Now they kind of are forced to work because their husbands can't support them the way they could in 1970. And so the fact that you now need two people to support a family as opposed to one, that represents a significant decline in standard of living. I also think people have smaller families today than they did back then, not by choice, but by necessity. They can't afford to support kids the way they could back then. Also back in 1970, the average American was much better prepared for retirement. They had a lot more retirement savings. Today, people have no savings. In fact, they're loaded up with debt. A lot more people own their home free and clear, didn't have a mortgage. Most people didn't have a car loan. They had a car by 1970, but they didn't really have a loan. Now people got mortgages on their cars. So we have a much weaker economy. We've been able to maintain the trappings of wealth by going into debt, by sending our women into the workforce. So a lot of these things have happened because had the women not gone to the work, we probably would have had a crisis a long time ago, right? If the women tried to stay home, the whole thing would have imploded. Or if we weren't able to borrow all this money and keep going deeper into debt. But one of the reasons that this was even happened was because of countries like China that were willing to make all the stuff that we didn't and trade it for all the money that we printed. It was the dollar's reserve currency status that enabled this, because if we couldn't run these trade deficits, we would have had an economic collapse decades ago.
Right.
So a lot of things that people didn't necessarily consider in 1970 because they didn't have a crystal ball. They didn't know that the women would go to work. They didn't know that all these new ways of borrowing money would be invented so that we can keep on kicking the can down the road. They probably didn't think of China was going to end up being our biggest supplier and our biggest lender. We'd be able to borrow all this money, or even Japan. Japan was nothing in 1970. And so a lot of things happened that enabled us to delay the day of reckoning. But now people think that day is never going to come because, it's eluded us for so long. But clearly there are so many signs, right, that we're close. I seriously doubt another 50 years is going to go by and people are going to be like, Peter Schiff was saying that 50 years ago. And look, everything is, we have $100 trillion debt. What's the problem? I don't think we're going to get to that point. Or if it went on another 50 years, it wouldn't be 100 trillion. It'd be, what's after a trillion? A quadrillion, whatever. It would be some huge number.
Right.
But it's obviously not going to get there. Something is going to happen in this decade,
Right.
And probably in the earlier part, not the end.
Okay. All right. I'm with you. Look, Peter, thanks for coming back on. It's great catching up with you. And if you want to hear more from Peter, check out Peter Schiff the Peter Schiff Show. Find him on YouTube, anywhere you listen to your podcasts. And I appreciate your time, Peter.
Okay, great. Just checking my schedule. I got one, so make sure I'm not late for my next talk.
All right, man. Okay, thanks again.
All right, take care.
Okay, guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue. But coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.